All right, joining us now, great pleasure, newly confirmed Federal Reserve Governor, Mr. Stephen Miran. Steve, thank you for coming on this set. And you know, I said yesterday I thought you were a hero for dissenting and pushing for a 50 basis point cut. On the dissent, 50 basis point cut, just tell us your thinking. Tell us why we need a 50.
Thanks, Larry. It's great to be here. Look, you know, my view is that there's a number of disinflationary forces in the works that are I would say, sort of that are coming into play that will be bringing inflation down in the near term. For example, lower immigration. My view is that the supply of housing adjusts only very sluggishly. And if you throw millions of new residents, millions of immigrant residents into a relatively fixed supply of housing, you get lots of shelter inflation. Rents go higher. We've stopped that. The border is closed, and probably well over 1 million migrants have gone home in the first half of this year alone. That, to me, is profoundly disinflationary, and it's in the pipeline. I also disagree with, I think, sort of a lot of other analysts out there in that I don't see any material inflation from tariffs. I see no evidence there's been inflation from tariffs whatsoever. To me, if I were going to look for evidence of inflation from tariffs, I would think that import-intensive core goods would be inflating more than overall core goods. Not the case. And I would think that U.S. goods inflation would diverge in some meaningful sense from goods inflation in other countries. Again, not the case. So as a result, I don't see any material evidence of tariff-driven inflation. So in my view, monetary policy is pretty restrictive, and the longer it stays there, the bigger the risk that you get some significant downside risks to the employment side of the mandate.
This is the part when Chairman Powell said he talked about risk management or risk preference. I don't think he solved any of those problems with 1/4 of a point. So you're sitting around the table now with other governors and Reserve Bank presidents. What was their argument against half a point?
Well, I think a lot of folks, have publicly said in the past, and so to be clear, I'm only speaking from my own views, but I think a lot of other folks in the past have publicly said they're very worried about inflation from tariffs. And as I said a moment ago, that's just not my view. I just don't think that's consistent with the evidence we have to date. I don't think it's consistent with the evidence we have from 2018, 2019, when President Trump was raising tariffs on China during his first term.
What is their evidence? I mean, you're sitting around, you're professional economists or economic thinkers. There have to be facts.
Yeah, I think the evidence that a lot of people use, a lot of analysts use when they think that tariffs are driving inflation, is they compare what's been happening in goods inflation, say this year, relative to long-term trends that prevailed before the pandemic. But to me, that's the wrong counterfactual to use. I mean, if you think about a long-term trend before the pandemic, you're talking about China entering globalization, entering the world stage, exporting lots of deflation to the world. And I think that's just not comparable to today's environment. I don't think it's appropriate to say, okay, anything that's different about today versus long-term trends before the pandemic must be due to tariffs. I think that's an inappropriate comparison to be making. And I don't want to sort of say any individual is making this type of analysis, but I think that there's a number of analysts who do make that type of argument. And to me, I just don't find it convincing.
So why is it that year in and year out, let me start, month after month, quarter after quarter, year in and year out, the Fed publishes these dot plots with their forecasts, and they always have less than 2% economic growth, no matter what's happening in the world. 2%. So now you've got, and you're not in a political job here at the moment. You're a Fed governor. But the fact is, the administration has tax cuts, deregulation, more energy production. You've also got a lot of analysts that believe the AI revolution is promoting productivity, which is counterinflationary. But why doesn't anyone think the economy could grow at 3% or better without inflation? You've been on this show talking about disinflationary pressures from supply-side policies, right? I'm sure you're continuing that conversation with your new colleagues. Why doesn't the rest of the Fed? Why are they so hidebound in their ways?
Well, I don't know. I can't explain the views of other folks, but my views are consistent with what you just said. That pushing out the supply side of the economy pushes out growth. Right? It increases growth, it increases GDP growth, but not only does it increase growth, but it increases what economists would call potential growth and actual growth at the same time, meaning there's no inflation as a result. And if you push out the supply side of the economy at the same pace that demand and actual growth are increasing, then you get a lack of inflation, and as a result, there's not really a reason for monetary policy to respond to it. And I think that might be a difference in my view versus that of many other analysts.
What's your economic outlook now, let's say till rest of the year?
Yeah, my economic outlook is pretty positive. Look, I mean, I think the first half of the year was not as strong as I would have hoped, but as I've said in other places, I think a lot of it was due to uncertainty. We had uncertainty that we might have the biggest tax hike in history. We had uncertainty as we had a massive change in trade policy. That uncertainty is dissipated. Right? The tax bill was recently passed by the Congress, which avoided that large tax hike. By and large, trade deals are made with most of our important trading partners. That uncertainty is gone, so I expect the second half of the year to be better, but also the incentives for investment that'll kick in from full expensing, in my view, my reading of the economics literature is that the full expensing was the most powerful bang for the buck in terms of incentivizing investment in the Tax Cuts and Jobs Act.
I've made the same case myself. Last one. So the outlook for interest rates in general. Can you persuade your colleagues to be faster and maybe make larger steps towards lower interest rates?
Well, that's what I'll be trying to do, Larry. My view is that we're quite a far away from neutral and that policy is quite restrictive. And the longer we stay there, the more we're bringing on unnecessary risks of higher unemployment to the employment side of the mandate. And so my view is we need to get back towards that area, very quickly rather than continuing to run.
Which would be what? They're saying the Fed's tradition is 3%.
Yeah, maybe
lower than that.
Yeah, maybe I'm a little bit lower than that. Excuse me.
You get your colleagues to go along with that?
Well, I hope to convince some of them in coming weeks and months. I mean,
are we in an easing cycle, do you think, at this stage? An easing cycle? It's going to go on for several months?
I think so. And I think, and I think that, there are a lot of folks that are quite focused on the tariff inflation. I think people have been moving in the direction that tariff inflation is less than they initially thought it might be. It's less persistent than they initially thought it might be. And to be clear, I think that's true across forecasters, right? If you look at forecasts from investment banks, if you look at if you look at a variety of forecasts, you'll see that type of analysis, and and I think that's a widespread view, and I think that folks will eventually continue to come around to the view that any inflationary spike that you get from tariffs is just is not significant enough to be a significant driver of monetary policy.
The Miran view. I'm going to call it the Miran view. Thank you for coming on set. We appreciate it. Congratulations on your new appointment.
Thanks for having me, Larry.
You bet, Steve Miran. Appreciate it very much.